What's cracking, investors? It's February 1st, and this is the video log. It takes 30,000 to a million. There's going to be some changes in the account soon, I can tell. Here's what's happening. I'm sitting at 175, 103 at the moment. Definitely losing to the market, but that's fine. All the big names had pretty good performance today, except, the one that I'm holding, which is Apple. It had, an after hours gain of about 0.42, but it's nothing compared to some other after hours gainers like Meta, for example. By the way, the reason I'm going over this data here is because it's a huge earnings week. And look at Meta is up over 20% in after hours and was up 2.75 during trading hours. So a lot of the big names I think are reporting. I think Amazon is reporting as well. I think that Apple is reporting, Meta is reporting, Google is reporting. Amazon's up after hours crazily. I think Alphabet, right? Google is up after hours 3.63. So Apple is the one that's really not benefiting from any of these juices. But I do think they're a little bit short. They're going to be a little short-lived because I actually think Apple's in the best shape out of all these companies that were just listed. So even though it's not moving, I expect the earnings to be fairly strong, probably under last year's, but over what's expected. I did predict at the beginning of last quarter that the iPhone Pros were going to have a record sale for the premium version of the phone in terms of numbers, and I'm still sticking to that, even though it's a foregone conclusion for most analysts that that's just not going to happen. But I think it's going to be fine. Also, the Fed spoke, and the determination was that it's going to be a 0.25% or 25 basis points increase in the interest rate, and that's going to be the new benchmark. A lot of the brokerage accounts are probably going to be shifting their money paid out, their yields on on their sweeps and all that. So we're going to be getting more interest for our money that's just sitting idly in our Robinhood account. I'm looking forward to that since I actually do have some cash in there. And let's see how much exactly I have. I think I have $4,100 worth of cash. Collecting interest though at the moment. Oh, there we go. All of it is collecting interest. So far this month I've gained 43 cents. Huge benefactor of this 4% interest rate that's going to be going up most likely in the next couple of days. I'm expecting Robinhood to announce an increase. Other companies like Wealthfront have already announced increase. They usually do it right after the FOMC meetings. Wealthfront is. If you're not familiar, Wealthfront is just another robo-advisor app, kind of like M1 and all these other ones that invests for you. I'm not doing an endorsement, nor am I trying to trash talk the app. I use it for my Roth IRA account. I don't have a Roth IRA through work or anything like that. I was unemployed or self-employed for a very long time. So I actually have my own Roth IRA in Wealthfront. So I trust it. It's fine. It's insured. It's no different than any other bank. So I don't think there's much risk in holding my Roth in such an entity. Okay, so moving on to the account. Now that you've got enough background information on what's going on here, this is my 1 week chart, up 1.6%, 27.64 on the 1 month chart, so a massive month. But it could have been actually a lot bigger than this if I had just enough balls to keep my Paramount and Smith & Wesson positions, because Smith & Wesson and Paramount have been experiencing a continuous ride up. Smith & Wesson, sorry to interrupt the program, your regularly scheduled programming, but Smith & Wesson is up another 1.53%. It's $11.25 now. It's almost at $12. So as you can see here, the 1 month chart, look at this, 28.28% up in 1 month. This is rivaling like Lucid type of gains. Let's take a look at Lucid. If you don't know Lucid, maybe you lived under a rock. It's a EV manufacturing company that's up 85.73%. It was up 125.97% at one point, but it's coming off pretty big lows. I mean, the company got just completely demolished. It went all the way from 30 to 6. So a lot of downside movement here for the stock, and it's a money losing company, just like all these growth stocks, EV stocks. This future is very uncertain, and so it just got hit with the rest of the ARK slash EV slash futuristic innovation stuff out there. Anyways, I was at a month. So a month is 27.64%. 3 months, 7.53%. Year to date, an important one is 28.24%. 1 year chart is going to be negative, minus 7.44%. And then all-time chart. Now, as I always say, the all-time chart doesn't make much sense. These numbers are a little fictitious. It should be actually higher than 142%, but that's fine. It's because the money added that I'm going to be subtracting. I talked about that in previous videos. I don't need to go over it again. Here are all the positions. I actually sold 2 call options on Apple at 149 strike price. These are the rest of the options. You can pause the video player to try to figure out the exact positions if you want. They're really kind of meaningless. There's not a lot of money tied up in here. Most of the money is here in Apple, Realty Income, Main Street Capital. Those are my 3 positions now. I only have 3 holdings. And then there's my watch list. So I'm watching Smith & Wesson. Let me see how Paramount did. I think Paramount also went up, and so I sold out way too early from this. It's a 24.34. Holy moly, I missed out on so much money. Oh, it's up 41. Yeah. That's fine. It's fine. We're just going to man it. You win some, you lose some, eh? Anyways, I should have held on to my guns, but it's all right. Account tab. And try to save face here. Account tab. We're going to $171,000 stocks and options, a little bit of cash. Okay, so here are my 3 positions. This is based on total return. And then equity, $102,000 from Apple now. I'm looking to exit at 149, at least 200 shares of this. It's at 146 at the moment. I'm fairly confident that it's going to go over 149 at, actually tomorrow, after hours is when the earnings come out. So if the premiums fatten up, I might sell another call option, maybe at the 151 level or something like that. I have yet to determine that, but I'm trying to exit some shares so I can pull some cash out of the account. What else can I show you here? So investing tab. Relative performance. You saw the 28. Let's see, the 1 month one actually is the one that we should be looking at. It's 27.64. Let's see how the S&P did. I think it's probably around 10%. What do you guys think? I think 10%. Yeah, 8% on the S&P 500. 1 year chart, minus 8.55. It's a good one to look at too. And then the 5 years, 44.14. So that's the performance of the SPY. The oldest exchange traded fund out there is the OG. It's probably one with the highest, maintenance cost. I forgot what it was called. The fee that it charges the investors to operate. I forget. Sorry about that. But that's the account here at a glance. Still sitting at 175. I don't think I'll be getting anywhere near 214 anytime soon. I could have had the chance if I had held on to my positions of Paramount and Smith & Wesson, but I didn't, and so now I took a permanent loss of like $30,000. Otherwise, I'd be close to that already. I'd be over 200K. But no big deal. Not to worry. I'm just going to be accruing these 43 cents per day and be happy about it, right? Alrighty. So that is the relative performance. Market comments moving forward. I'm looking forward to the Apple's earnings. Like I said, I think it's going to be better than people anticipate. I think, though, that Apple might guide down for a little bit. Actually, I don't know, because the China reopening, right? It's supposed to be a big deal, and that could spur excess demand from China. But honestly, I think a lot of the demand is when people are locked up and want phones and things to do on their phones, right? So that's when all the money is spent. One big difference between the China reopening and the US reopening is that Chinese authorities did not flood the system with cash like the US and many parts of Europe and the rest of the world did. So I think that things might play out a little bit differently there. People might be a little more scared and hold on to their money a bit more than people did in the US because of that lack of stimulus. So no one's certain yet what the implications will be. People seem to think that it's fairly bullish. Chinese stocks have gained a little bit but have leveled off. Though that's another play that I didn't follow through long enough, which is, by the way, one of my weaknesses as an investor is I don't let things run up quite enough. And so things tend to not play in my favor most of the time because of that. I think it's because a long time ago, this is also a video log, right? So I need to record, like, one of the main reasons I do these video logs is because I want to record my feelings and my thoughts on each stage of my investing process. And I'm thinking because I got burned really hard when I first started investing a long time ago, and I held the position way too long, and I saw it go from a winning position to a really big loser. And so I think I kind of got imprinted in my memory, got burned, and so I've been extra careful not to hold on to positions too long and to take profits along the way or cut positions that are losing if my thesis changes. I did admittedly not wait for the Smith & Wesson earnings report, which I was waiting for, to figure out how they're operating the cash and whether they're gonna be net cash positive or negative, which was going to be my deciding pillars of whether or not to hold the stock. So I did not wait for that because I saw the stock run up and I decided it's time to actually pull some money out. So far, I've been wrong to do so. I don't know what's going to happen after earnings. It's going to really confirm whether or not sticking to my guns exactly was the right move or not. So I'm curious to see what happens. Smith & Wesson is number one on my watch list. I really do like the company. But we'll see if that pillar that was holding me in the company is gone or it's still there. It'd be interesting. Other than that, of course, looking forward to the rest of the earnings week. Should be pretty interesting Thursday and Friday. Going to be a lot of action in the markets. And I was actually thinking of doing a couple calendar spreads. I actually haven't done a video on what a calendar spread is and how it works. If you want me to explain it, if somebody's curious about calendar spreads, let me know in the comments. I may make a video about it if someone's interested. Maybe if they're not, but if you're interested and want to know what it is, let me know and I'll try to explain it to the best of my teaching abilities. All right, I'm going to call it right here for now. Hopefully you all are making even more money than I am and not taking any permanent losses like I did. Good luck on your Thursday and Friday trading adventures if you're an active trader. I'll probably make another video soon. Peace out.